Hi, everybody. This is a new episode of a Bitcoin Critical Pulse with Giovanni and Chris. Uh, in this show, we're discussing a particular way of looking at the market, where we're looking at the market in terms of this science that is called complexity theory, or also this criticality science. And um, so this is a way of thinking about the market, also kind of continuing my interest of using physics concept applied to the market. It's The main idea is that uh, assets in general, but in particular Bitcoin, because of all its very precise characteristics, it's a system that kind of lives in on the edge between order and chaos. And so it's very important to understand when we are switching state, right? When we are going to this more organized, predictable pattern to situations where locally, at least, the price does crazy things, right? Uh, we are used to this as Bitcoiners. Like, in the last few days, everybody was complaining how the price was boring. And, it can go in both directions. That is the point. The corrections are very strong and very fast, um, and they can be corrections or they can be moments where Bitcoin get excited and we go up, etc. But they are kind of the two faces of the same coin, So the most important thing is not are we going up or down, but are we is something happening, right? So there are many analogies. We mentioned going from water to ice, for example, or another example that is very typical of this critical phenomena is when you have a sand pile, and the pile you can continue to put sand, and nothing seems to happen, right? Very little seems to happen, and then you add one more grain, and all of a sudden you have like kind of a cascade, right? You see all these grain sounds going down, and something uh, suddenly happens. So this is very typical of these systems, and they have been studied. There are many tools, and so we are using these tools to actually, we apply to the market, in particular Bitcoin and the environment, to understand them from this point of view. And it's very powerful. And in our opinion, both Chris and I come from the physics side. Chris comes from the more traditional finance side. All the other tools that are available, all the traditional technical analysis tools are like toys in comparison, like children toys. While this is really is the professional ones, right? So anyway, Chris, do you want to add anything to this? Or
I think you said it well.
okay. All right, and I don't know why this. Okay, then maybe we can go ahead. Chris wants to do this announcement.
Yes. So we have the disclaimer up, and this is not financial advice. It's for educational purposes only. Trading involves risk, and you need to do your own research, which is what the disclaimer tells you. And because you've all read that now and seen it many times, we can move on to the fun stuff.
Okay. I'm going to share my screen for a moment, where I'm going to show you what the power law is doing. Okay. So, we discussed this many times. So we have this long-term view of the power law. That is basically the white line here. I have discussed it. This is something that I'm exploring recently. Basically, it turns out that if you look at one of the deepest concepts in physics, that is the principle of least action, a power law is basically the path of least action when you have a system that scales up. If you have these conditions where you are expecting the scale in one axis, like the price, on the y-axis, and in the other axis you have time. If you have a system that has these characteristics, then it's the power law is like a geodesic. It's the path of least distance, least action. Takes it's the most probable path for the system to follow. It's something that I didn't think about until recently, and I'm doing a lot of work in trying to demonstrate that this is exactly the case. We did some episode of the physics of Bitcoin where we started to explore this topic. So this is the path of least action. What Bitcoin likes to go through. It's kind of an attractor, but there are deviations, right, from it. And in the past, we had these bubbles where we deviate quite a lot. And they are being very regular in terms of their height, when they happen, when they end, and so on. And this year, we have something different. This cycle, we have something different. We started well, like at the exact time we were supposed to start in terms of a bubble. But after some time, we started to have corrections. And if anything, we are simply following the power law. That is kind of interesting. It's almost like Bitcoin is done with cycles. I think cycles will still be there somehow, but they are not as pronounced as before. Now, this is a long-term trajectory. We're going to see, like we mentioned, that Bitcoin can do crazy things all of a sudden. Maybe as we approach the timing where we are expecting, it is basically Q4, end of Q4, maybe something happens. But so far, it seems that Bitcoin likes to stay close to that power law. So that is what I have to say right now. We can say much more, but today we are trying to keep the show relatively short, around 30 minutes, because there are some other obligations. But we are going to make it concise and full of information. So I'm going to stop here to give enough time to Chris to make his presentation. If you have any questions, we can discuss them at the end. Okay, go ahead, Chris, please.
Thanks, Giovanni. So this is where we were last week, and you'll recall that we were in a white state, which are the two parallel lines, the static and the pulse lines of the log periodic power law that we have showing here. And price had retreated from those lines, and we were starting to print higher and lower projections based on what was structurally happening underneath price in the marketplace. And we expected and said last week that the market would likely continue on moving back and forward until there was resolution achieved here. And we looked at the monthly chart, and you'll recall that we had a target up here near the 123, 124,000 mark. Well, it's the end of the month, and we haven't achieved that level, and price has retreated and seems to be heading down. And the static and pulse power law lines here are classifying this on the monthly as moving into a bear phase. What would it take for this to be invalidated? You'd really need to see a very significant drop in price down to 100, 110,000, and that would likely give us a target down towards the 85,000 mark. So that's what the monthly would likely suggest. But for now, this is still intact, and we need to see how the market evolves. This is a very, very slow-moving set of indicators here, but nonetheless, it gives us a bit of a roadmap. Moving down in time, the weekly has also been classified as being in a bear state, but purple. And you recall purple is when there's a lot of price agitation, and it's somewhat schizophrenic. It's also known as a period doubling, which is a phenomenon in chaos and self-similarity when there's feedback loops and so on. And it's what happens when price gets agitated. So we're detecting that there's a lot of price agitation, and that's resulting in this price movement that we've seen evolve. But what's happening with the weekly is that there's no real price projections being generated. So we're still in an unresolved state there. Coming back to daily, we have a clear separation now of the pulse, which is shown here. And this is the faster variant of the log periodic power law. And we think of it in two ways. The pulse is kind of like the scout that goes out into the battleground to see what's going on and reports back. And if the general decides that he wants to take action, the static line, he'll follow suit and confirm the move and make the advance. So what we're seeing here is a fairly reliable signal of price movement when this separation occurs. So, and we've seen this many, many times in the charts that we've profiled on this show, that when the pulse separates in this type of fashion from the static line, you get a fairly aggressive move in price that continues for a period of time until one of two things happen. Either it fails or the static agrees, and you would see this static state down at the bottom here, this little table where both cells would turn red. And that's a very powerful signal, very reliable signal. It hasn't kicked in yet. So the question is, the other thing that we've mentioned is that through this period of consolidation and where the system is trying to find resolution as to which direction it wants to go, price projections occur both above and below the current price activity. And when there's a resolution, one side gives up the ghost. It stops making projections. And we've seen that here. These upper levels have been invalidated and lower levels have been projected. P1 level and P2 levels have both been met, and the P3 level, which is at 112,439, has not. If price continues to move down through the 113 to the 112,439 level and trades through that, then the higher order targets P4, P5 are likely to get triggered. And that would suggest price would likely head towards somewhere like 109 to $103,000 range. Now, will that happen? I have no idea. It's simply a presentation of what the underlying math says about the structure of the market. And it's a very dynamic set of numbers that are produced here and that populate the screen. And they are solely a function of the price activity. But they give us a sense of what might transpire. And by going down in time frame, we can start to see what information we have in these lower time frames. And you recall that when we go down into the very low time frames, so this is 5, 15, 30, 1 hour, 2 hours, 4 hours, 8 hours, and daily. And there's this self-similarity that occurs in the patterns that get repeated across these different time frames, and they often give us clues as to what's likely to happen. And when you see the lower time frames starting to stack up and produce the same sorts of patterns as you're seeing here in the 5, 15, 30, and the 1 hour charts. So you'll see there's a white state here that's been broken to the upside in the 5-minute chart. You'll see the same sort of thing evolving here in the 15-minute chart. We've got two parallel static and pulse lines, but price breaking away. What you'd expect to see if this was to continue is the pulse line here turn green and start to move up, just like it did in the 5-minute here, and then so on through each of these subsequent time frames. And when you get that cascade effect, you get a follow-through of price in the higher time frames. But this is always a battle, and it's a system that's trying to resolve itself and figure out which direction it wants to head. And it's hard to know at any point in time which way the battle's going to go. All you can do is monitor these lower time frames and see if there's an unfolding of the fractal patterns in a way that gives you a clue as to what each subsequent higher time frame is likely to do. And when you see them continuing to stack up with consistency and move in the same direction, that's when you get the move following through. So while the daily chart has us looking at this downside break from the pulse power law line that is yet to be confirmed by the static, in the lower time frames, the move is already underway. So the 8-hour chart has shown that this break is accelerating. And you'll notice here that we've got downside confirmations from the power law. That's what this little triangle and dot means. These are confluence and confidence indicators from taken from derived from the power law lines and their components. And they've started to populate this downward move. There's not any of these green ones occurring as there were through this period of consolidation here, where the market's just essentially oscillating back and forward. So we look at all of these things and we look at how these projections are stacking up. So right now the greens have stopped stacking up and we've got reds, but no lower projections below this level in the 8-hour. And these are the sorts of things that you continue to look for. Here's the 6-hour. So very messy, price started to move and then it retraced, and the two parallel lines interacted with each other, almost on top of each other, and then have separated again. Then more prices to the downside, then more confluence signals, and this double red state, which is a very strong signal for the power laws to generate, suggests that this move is going to continue for a little bit. So each time we get a move like this, it's instructive to go back to the lower timeframes and see how the pattern's evolving in each of them, and see if there's anything that we might discern for the strength of the move and its potential longevity in the higher timeframes. And even all the way down to the lower timeframes, these patterns repeat. They're just different. So here's the 1 minute, which is starting to roll over again to the downside. Doesn't really mean a lot. There's a lot of noise in these lower timeframes, but it's a clue. It's a clue that, will it flow through to the 3 minute? No, it hasn't yet. It's slowing down a little bit, but the 3 minutes still looking positive. The 5 minutes still looking positive. 10 minute looking positive. 15 minute unresolved, waiting for it to make a break or fail. So it's all about looking at what the different timeframes generate and how the patterns repeat, the self-similarity of them and the evolution of them from one time frame to the other. So that's how I'd think of the current price movement that we have unfolding in Bitcoin today. And I think, Giovanni, last week we talked a little bit about IBIT and Master.
Right.
So we can look at those if you want.
Yeah, absolutely. Let's go. And in fact, we can check how we're doing, right? And I'm going to make it more of an experiment, where we pretend. I'm actually going to do it myself, with a little money on Robinhood, just to be consistent. Let's say I didn't do this particular one, but we can do the next one. We'll do the next one. So right now will be very good, I think, right? If you're
So this is where we were last week.
Covered calls, right? And we were talking about maybe looking ahead of time, where a short amount of time, you could choose anything between a month to 1 week. Will be a slightly different place, but nothing more than a month, right? Maybe 2 weeks is a good compromise. 2 weeks it gives you a little bit more time. You get a little bit more money, but you're going to take the risk of things changing in 2 weeks, right? That is entirely
correct.
One week, probably nothing changes. Very unlikely, particularly in a situation like this where we just got a change, and the change is in the opposite direction. So it's more likely that we are going down, and even if we recover, probably we are not going above that white line, right? Is that fair to say?
Yeah, it's unlikely. I mean, what would happen is the pulse line will react first. So that's the second of the two lines that you see here. We're looking at IBIT now, and it's very much the same sort of pattern that we see for Bitcoin for obvious reasons. So here's our white state, and you see the two lines have separated. The pulse is turning down. The static is still white. So same formation, where the static and pulse states are shown here in this little table, and we've got a confirmation to the downside. We don't have any additional downside projections yet from this structure, but that's what it's showing. And last week when we talked about this, we were here, and I think we talked about selling the 68 calls against any underlying holding that you may have in IBIT, just as a way to generate some income. And that trade would have worked out just fine. It would have rolled off today, worthless, and you would have been able to bank that premium.
Right.
Then if we look at today, where price is all the way down here at 64, you could quite confidently sell the 68 strike and maybe even a lower strike, just because of the distance that's involved here and the move that seems to be underway.
So I'm looking at the prices right now. So for example, let's say that we're going to be a little bit more aggressive and we go to 66, right? That is so that will be the aggressive move. They ask for that, it's 56. So if you say you had 100 shares, so you will make about 55. What? So okay, $105. Yeah. So it will be $56, right? You will get $56 out of that trade. With this only with 100 shares, right? So basically, it's an investment of $6,000, right? So you will spend $6,000. It gives you exposure to Bitcoin anyway. It's kind of almost like buying Bitcoin, and then you can do basically just for people that don't understand yet, right? Because I'm starting to become a very strong advocate in Bitcoiners learning how to do this, right? So you learning how to have a little bit of a yield over your Bitcoin that you already own, right? So and many people are doing DCA, they're buying Bitcoin on a regular basis. So you could build. I'm not sure I want to suggest selling of some of your Bitcoin to buy IB. They should be kind of equivalent, but maybe you can buy some shares on the side, right? Some IB shares on the side. And then eventually, we are talking about having in-kind, type of ETF in the future, where if you sell it, then you get the underlying asset. We're not there yet. We get cash, but you can buy Bitcoin with that, right? If you really insisted about self-custody, etc. And it's okay. I think it's a good idea. Some people resist that idea, but if you can do things like this, right, with ETF. So let's say that you buy 100 shares. It's not, even just to learn how to do these things. And then, you're going to get $56. And if a price doesn't go back, so basically what that means, right? It means that you're selling the right for people to buy your IBIT shares if a price goes above. Now, you have to consider it needs to go above that strike price a little bit more, because people need to make up the money that they gave you. So, if you're trying to sell, like right now, let's say I'm going to sell cover call at 66. So I will immediately gain $56. I can buy more shares. On Robinhood, you can buy even fractional shares of IBIT. So you will buy not quite one share, but a fraction, almost one share. So now you have one more share of IBIT, and you can compound this, right? You can continue to compound it. And go ahead.
Well, I mean, the whole 56 doesn't sound like a lot of money to do this, but the point is, if you're doing this on a regular basis, on a weekly basis or a monthly basis, you're compounding at a pretty amazing rate.
Right.
And you need to not think of this in terms of the actual dollar amount, but in terms of the percentage gain that's being generated from this type of a trade. And I think there are different ways of doing it. So the method you're talking about, Giovanni, is a naked call. You sell the call against your underlying holding, so you're covered if the price rises. You can, worst comes to worst, you can deliver your IBIT stock, keep your profit, and then go again. Or alternatively, you can be more conservative and sell a higher strike, the 67 or the 68. Or if you want to do a hybrid type thing, you could do a covered call, which is you'd sell the 68 call and buy sell the 66 call and buy the 67 or the 68 call. Yes. You might take 39 cents instead of 56 cents if you did that, but you'd be protected. You'd be protected from an extreme move to the upside, and you'd still end up holding your position, your underlying position, and be in the game. So it's a compounding game, really.
Yes. And we are mentioning these things because we want to show you how to use these tools and what are the actionables. Now, it's up to you, your creativity, what you want to do, etc. But I know that in the Bitcoin world, there is a lot of resistance about trading, etc. But, this is a very conservative way of doing trading. You're basically, in fact, if you buy there is some discussion about buying some other ETFs like yield ETF like MSTY. They do exactly the same thing. This is how they get their yield. They are doing exactly this type of option, cover call options. They do it against MicroStrategy, but there is the same thing. In fact, if anything, doing it against IBIT, it's safer because you have a little bit less crazy behavior and volatility. So it's something that I suggest everybody to learn how to do. So maybe you can tell us what you see about this is
MicroStrategy.
Strategy.
Yeah.
I always say MicroStrategy because I don't know why they changed the name. It sounds a little bit silly.
So last week when we showed this graph, there was clear separation of the two periodic parallel lines, the pulse and the static, and that was where the crosshairs are right here. So at that point, we said this is likely to go lower, and that's indeed what's happened. So this is tracking Bitcoin. In fact, it's kind of leading Bitcoin. It was ahead of the move that occurred in Bitcoin, which is interesting.
Yeah.
And it's still heading down. So it's got a downside projection here currently of 347 as a target on the daily. Let's have a look and see if there's anything else going on the weekly. Yeah, the weekly's even lower, 328 down there.
Mm-hmm.
Let's have a look at monthly.
Where is the white line on the daily?
Well, it was up here at 455.
Right. So, that will be a strike price you could use, and it will be pretty safe, I will say.
Yeah, there's one other tool we have. This is part of the suite of tools.
Within a week, if you're thinking a week. So
yeah, so this is another tool that we have here. You'll see there's this dotted line, which is a dynamic attractor, and then these two other lines, which are kind of like absorption bands. They're sort of energy absorbing levels, and you'll see that when this white state occurred, the upper bound here was right on top of it. So what this means is that, firstly, the white line tells us the market's exhausted and needs to figure out which direction it wants to go. It needs some time to regroup and figure out what was going on. It eventually decided that was to the downside. But at the same time, this absorption level was here ready to suck up the energy from any upside movement. And this attractor, back at a week or so ago, would have been somewhere, in this middle ground between these two lines. At the moment, it's more down towards the lower bound because that's where price is being attracted to. And as price migrates down, the attractor adapts and says, okay, this is where all the action is, but I still kind of want to be up here. So these are dynamic lines that evolve with price and the parallel lines. This is an attractor level that price comes back to. So it may be that strategy would be, would bounce between this absorption band at the lower end and this attractor, or not. It may be that as was the case here, and it ran up against these bounds and pushed until it ran out of energy. It's possible that it can do the same thing to the downside here. And with these lower targets being printed and still viable, it would suggest that that's the more likely course at the moment.
Yeah. So, I will say you could even be more aggressive, maybe for 10, within a week. It's unlikely to be reached. And if I look at the price for that, for 10, let's see what it is. We are getting out of the range. Most people are even offering things that are lower, 390, 395, in the 400s. Even the 400 is 435. We're asking for 435. It is pretty good.
Let's see what the lower time frames are telling us here. all these lower time frames have just rolled over. They're all pointing down.
Yeah. So it's very likely that we have a correction down, so you could, use a strike price that is 400 for a week. It's unlikely, it will go back there.
Mm-hmm.
And, with 100 share, that will be $400,
Yeah. So just
$135.
Right. So this attractor level is currently, at 384. So if price was to come back, 384 is where it's likely to run into trouble.
Yeah. Yeah. I will, if I was a novice, I will try with IBIT first because it's much less violent in terms of the movement. That is the good thing about MSTR. You're buying a very volatile asset, and you can do things. But I would reserve that to more experienced traders. Right now, playing with IBIT is relatively safe, and these small gains are compounded. So basically, you're not going to do much. And if people are sometimes worried about taxes, you can open a IRA account on Robinhood, and do all these within that, because you can play options, etc., in your IRA account, and your taxes worries are much less relevant. So it's something that I will learn how to do. It doesn't take, you don't have to sit in front of a computer all day long. You're not like a intraday trader. This is something that you do once a week, So, and it can give you a consistent stream that improves, or yield that improves your performance on holding Bitcoin. That, unfortunately is going down over time. We already demonstrated it's part of a power law that we had a very incredible gains early on, and they are going down. They're still amazing. If you use a power law formula, we're talking about 45% right now, and it will take about 12, 14 years to go down to 25 or something like that. So it's still amazing for the next decade, But in addition, if you can add even a little, I calculated even 1.5% a month, that is quite achievable. You can kind of almost over 10 years, you can multiply by 5 your Bitcoins. It's kind of crazy, because compounding is a miracle, So
Sure
it's
is.
one of the very important uses, use cases for these tools.
So one of the other things, you mentioned not sitting in front of a screen all day. Some of the guys in our group that are using this, the log periodic power law critical pulse tool, have started to program their bots to trade the signals and the levels that are generated by it.
Fantastic.
And they seem to be getting some pretty decent results from it, which is great.
Yeah. Ask if they are willing to share the code, because it would be nice to, in the community, to share resources. I can think of myself how to do that, and we can really share it.
I think they're using some pretty commonly known bots that are out there, so I'll ask.
Good. Okay, guys, we say we wanted to keep it within 30 minutes. Chris has some event that he need to attend. We are, by the way, we have an announcement. We are coming back next week on Tuesdays. We are changing our schedule. So instead of Fridays, it will be on Tuesdays, and it will be 2 p.m. Pacific time. Okay. And we have a couple of questions. Do you have maybe a couple of minutes?
Sure.
Mostly one main question, that is this one.
Yeah, the other indicators. So there are 9. They're all profiled on the website. If you go there and click on the little icons, there's a little summary that tells you.
Do you want to show the site, if you don't mind?
Sure.
So people, and the address for the site, it's in the scrolling title. below.
Yeah, hang on a sec. Okay, so the website is complexitytrading.ai. And if you scroll down here, these 10 little.
I'm going to share it. Okay, here. Go ahead.
Yep. So these 10 are the tools that are coming online. The PPLCP is currently available, but each of these others will come online. And we're going to bundle them. These are all designed to work with each other. They all come from the foundation work on the structure of markets. So this is not like standard technical analysis. In fact, it's nothing like it. These are all scientific methods that are drawn from physics and geology and a whole bunch of other disciplines, where the scientific methods used in those fields to solve very specific problems are applied to their analogs in markets. And they do different things. So when you get confluent signals from these different tools stacking up, it's completely different from the way signals stack up in traditional technical analysis, where you might get a MACD or an RSI and a stochastic saying something. They're all kind of just using price as they're saying the same thing a little bit differently. The methods aren't so significantly different from each other, and you're just reinforcing not very good information, shall we say. So when there's confluence from these tools, they actually mean something significant, because they're completely different disciplines that are applied and reach the same conclusion. So the 9 other tools are designed to work with the log periodic power law critical pulse, and they all do different things. And depending on how you trade, whether you're someone who's a swing trader, a day trader, a scalper, someone who's a long-term holder, someone who's more of a sort of macro thinker and you position yourself and move in and out, all of these tools are useful in different ways to people depending on their particular focus and the time frame that they want to trade. So, and it's hard to know which of these would be right for you. So what we're going to do is allow people to mix and match these. They'll be available in groups of 3s. You can pick any of the 3 that you want. You can try them out and say, Chris, I've had enough of this one. I don't like it. I want something else. I want to try one of these other ones. And we'll accommodate that until you find the suite that works best for your particular type of trading activity.
Yep. And we are adding also my indicators to these, my power law long-term indicators. So if you actually sign up, you can also have access to some of these long-term power law indicators.
And I got to say that's pretty phenomenal, Giovanni. I mean, the work you've done is great. And just to frame it for people, Giovanni's work is really the long-term macro roadmap of where Bitcoin's headed based on the power laws. And the numbers are what they are. The math is what it is. And it gives you a very, very good perspective as to what's likely to happen with Bitcoin going forward. And that's the sort of big, 30,000 feet view. These tools bring you right down to the, second by second view. And they're based on the structure, understanding the structure of the market and what that's likely to do to price. Yep. So if you think of everyone who participates in Bitcoin, what we're looking at is the impact of their activity in the marketplace, and price is the footprint that activity leaves behind. So all of these tools are designed to work at lower and lower time frames in a time invariant sort of method that complement each other. And you start with Giovanni's longer term work, and you work your way down through the time frames, and you can see the fractal nature of these constructs and how they interact and how they evolve in patterns that just keep repeating themselves. And it's not like a head and shoulders pattern or a doji candle or any of these other things where there's an element of subjectivity in the interpretation. This is purely science-based, math-based, and the results are what they are. And that's why we think of things in terms of the market's either confused, it doesn't know what it's doing, or it has intent and direction, and it tells you what it's doing. And all you have to do is follow along. You don't have to be in the market all the time. You can if you want, But at these lower time frames, if you're looking at moving in and out, these are the sorts of tools that that you want to look at, and they're not available anywhere else.
Yeah, again, Chris, show us somebody wants to start to use them. If I, it's correct, right? If somebody signs up,
yeah,
you can have access to some of my indicators. So Chris will give you a link to come and join our Discord, the Power Law Discord. Then just let me know. I will give you access. But right now, you're getting access if you subscribe to this main indicator, with the idea that as they come up, you get access to all of them, right?
Yes, correct.
Package. It's a one package. It's just that we wanted to release the first indicator, and then eventually, as the other ones comes online, you can get access to all of them. It's a package. It's one single package.
Yeah. So the answer to the question, when do these come online? I'd say the next month. All of these tools are built. They all function. I've just got a little bit more work to do to them to put the collateral together so that people, when they get them, they can understand what they are, because this is a different way of thinking. It's a different approach to markets. We're less concerned about price, even though we calculate where it might be headed, where it might be attracted to. We do the math behind, that's happening kind of underneath the surface. And these all do it in different ways and have different focuses, and they pair and work with each other in different ways.
But if you want to start to use them, right, you can click on the first one, right?
Yes, you click on the first one. You can subscribe
now.
It'll take you here. You complete the subscription details. Give us your TradingView user ID so we can send you the invitation.
Yeah.
You'll get a white paper that describes the tool and how it's used. But also, if you click on here and you want to,
and we have also both a Power Law, long-term Power Law community, and also this complexity trading Discord community, but because we discuss slightly different things, and so you will have access to both of them.
Yeah. So exactly. So you can find out about it on the website. I'd say a month to get the rest of the information out on in a form that I can give to people so they can digest what these tools actually do and how to think of them and how to use them. But they'll be coming on, and they'll be available in groups of 3, as I said, that you can mix and match. So and each of the tools will have this same sort of, so you click on this one, the log periodic power law, and learn more. And there's a little summary about what it does. There's a little example chart at the bottom. Each of these tools will have an equivalent to that, so you can get a sense of what they are and how you might want to use them.
Fantastic. And as the show goes and more indicators come in, we will give you examples of how to use them together, how to reinforce the information, etc., etc. So we will continue to improve and add all these tools, so they became more and more powerful.
Yeah. And Giovanni, as you mentioned, if you sign up here on the website, if you put your email address in here, when we publish our newsletter, we'll send that out to you.
We're still working on the first issue. Probably is going to come up sometime early next week. This month. Maybe 1 week from now or something. But please sign up so you become part of our family and get informed and updates, all kind of things. And there will be discussions, the current market. There will be suggestions, like we just mentioned, for options, and also some like mini lectures about the background science, these complexity theory ideas, how they apply to the market, maybe a list of books that you can read or articles, would be really cool. Something unique that doesn't exist in the entire Bitcoin community, because again, we focus on science. I'm very glad to work with Chris, because we're kind of putting together, my understanding of physics and his experience in the traditional financial market. Chris has a long experience, connections, with big names in the financial world, and this. I'm so glad that he has that experience, but he also had a vision of realizing the limitations, and so he's transcending it and going. So it's really cool, because I will probably. There are very few people that can understand this perspective. Very, very few people. Anyway, guys, I think this is a good place where to stop. And we will be back next week.
Thanks, guys.
Bye, everybody.
Bye.